My name is Lucas Ford. I'm 18 years old. In the last 12 months, I doubled my money in the stock market. Today, I'm going to explain 4 principles that, when applied correctly, can make you money even if you're just starting out. Now, I know what you're thinking. The stock market is risky, or I don't have enough experience to invest. I used to think the same way. But here's the thing. It's not about trying to time the market or betting on the next big trend. It's about understanding the right principles and using them to grow your wealth over time. In this video, I'm going to walk you through exactly how I double my money in the stock market in 12 months and give you the exact steps you can follow to get started. Whether you're 18 or 80, this approach is for anyone serious about building wealth in the market. Now, let's kick things off with the first reason. Invest in stock with future potential. This is a game changer for me, right? When I started investing, I realized one thing. I wasn't in it for quick wins. I didn't want to buy into the latest trend or stock that was hot for the months. You have to make decisions that pay off over time. Invest in companies that you truly believe have long-term potential. Now, that stock for me was NVIDIA. NVIDIA didn't catch my eye because its stock price was going up temporarily. I saw something deeper. NVIDIA is leading in AI charge, and at that time, the AI space was already growing. But I know AI is only going to continue to grow in 5-10 years. Now, their stock price has surged, and I was a part of that growth. And think about companies like Google, Amazon, Uber. These are not companies for today. These are companies designed for the future. Google's investment in AI and cloud computing is going to shape the industry for years. Amazon is still a leader in e-commerce, and they're not stopping. Uber is reshaping the way we think about transportation, and the industries they represent are only going to grow in 5 and 10 years, and the stock's going to reflect that. These are companies with a clear path future for growth. So when you're picking stocks, you need to think about where the world is heading. You're not just betting on today's market, it's about betting on tomorrow's potential. So when you invest, make sure you're investing in companies with a vision that aligns with future growth, not just current hype. Investing in companies that you also believe in, not companies that you might think that you don't like. Invest in companies that you like. Make it personal for yourself. Make companies that you like, believe in, and see a future in. Let's talk about the second key principle that helped me double my money. Invest when others panic. Sounds counterintuitive, right? But this is where the magic happens. When the market drops, people start freaking out. They panic, sell off their stocks, and try to minimize their losses. It's easy to get swept in that fear and want to pull out your money too. But here's the thing. This is exactly when you should be thinking differently. This is when the real opportunities present themselves. The best time to invest isn't when everything is going up, everyone is celebrating record highs. No, that's when prices are at their most inflated. The best time to get in is when the market is down and fear has taken over. When others are selling in panic, that's when you find real value. Think about it. During market downturns, stocks often get undervalued, not because the company's performance has changed or its potential disappeared, but because emotions are driving the market. Investors overreact in short-term negative news, causing stocks to drop more than they should. But you're investing in companies that you believe in, stocks that have long-term real value. You'll know that these downturns are temporary and that true value of the company is much higher than what the stock price reflects in that moment. Let's give you an example. Look what happened during the pandemic, COVID-19. The market took a massive hit, and many great companies saw their stock prices fall sharply. But those who understood the value of those companies saw that this is an opportunity. The market wasn't suddenly falling because these companies were falling. It was just going through a temporary crash caused by widespread panic. Stocks that I believed in, like those in tech or e-commerce space, were on sale. Amazon, for example. The panic created an artificial dip in stocks and allowed me to buy at a significant discount. When the market bounced back, those stocks regained value and more. Now, the truth is, if you're investing in companies with strong fundamental companies that are built for the future and are positioned to grow in the long run, you should never fear a market dip. Instead, these dips are the moment that you buy. The market will go through cycles, and sometimes the stock price reflects temporary drops driven by panic, not the actual long-term potential of a company. So instead of following the crowd and selling in fear, you should be buying at those lower prices, knowing full well that the future of those companies hasn't changed. When others are panicking, that's when you have the opportunity to get in at discount, to buy quality stocks for a fraction of their true value. And in the long run, those discounted investments will provide you with real growth. as the market corrects itself and as those stocks recover. It's all about understanding the difference between short-term fluctuations and long-term value. So now, onto the third point. Do your own research. This is huge, and I cannot stress this enough. Before you buy a single share of a stock, you need to know what you're buying. Don't buy a stock because someone on YouTube or a friend told you. Do your own research. It's absolutely essential. When I invested in Nvidia, I didn't look at the price chart and make a gut decision. I dug deep. I looked at their financials, growth potential, and their market position. I researched their advancements in AI and how it's going to revolutionize industries like healthcare, automotive, and entertainment. I didn't rely on hype or hearsay. I relied on facts. You don't have to do it alone. I'm here to help you research stocks like Google, Uber, Amazon. I'll break them down for you, give my opinions, and help guide you in making smart decisions. But remember, it's your money, and it's worth the time to understand the company you're investing in. Learn how to read financial statements, earning reports, company news. Educate yourself in the best way you can to make the best investment that you can make. And if you're not sure where to start, don't worry, I'll be covering in-depth stock research and analysis right here on this channel to guide you every step of the way. Finally, let's talk about the most important principle, patience. This is where most beginners trip up. You've set aside money, you're ready to invest, and it feels like the right time, right? Not necessarily. Patience is key. It's not about understanding that having money ready doesn't mean you should rush into the market immediately. Just because you have set aside money to invest doesn't mean the next day you should be investing. Here's the reality. When the market is high and everyone is making money, it's easy to feel like you're missing out. But that's when prices are at their peak. The smart move is to wait for the right moment, which is typically when the market experiences a dip. That's when you can get stocks at a discount and position yourself for a bigger gains in the future. This is where patience really pays off. Now, this is directly related to the second principle, investing when others panic. The best time is to buy stocks isn't when the market is booming and everyone is hyped up. It's when the market drops and others are selling off their positions out of fear. During the market correction, stocks are undervalued, and that's when you get real opportunities. When you practice patience, you're waiting for those dips and corrections. You're waiting for the market to settle and for prices to come back down to reasonable levels so you can buy at a discounted price. It's easy to fall into the trap of fear of missing out in the market, especially when everyone else seems to be making money. But instead of rushing in, patience is waiting. Patience means waiting for the right opportunity. It's about being selective and strategic. This approach allows you to avoid the common mistake of buying high instead. You're setting yourself up for more significant long-term returns. By watching for those moments when others are panicking, you're buying at a discount. And that's the key to maximizing your investments. Patience isn't about doing nothing. It's about making the smart, informed decisions and means waiting for the right market conditions that align with your strategy. It ties directly to our second principle, investing when others are fearful. When you're patient, you avoid getting caught in the market and the market hype and rushes. Instead, you buy when things are calm, rational, and stocks are truly undervalued. That's when you set yourself for the future growth and get greater returns. So remember, just because you've got the money set aside doesn't mean it's time to dive in right away. The right opportunity will come, and when it does, being patient will ensure that you make the most out of the market. So here's what I want you to take away from this video. If you're serious about investing, follow the 4 key steps we just talked about. Believe in your stock and its future. Only invest in companies that have long-term potential. Buy when others are fearful. A market drop is an opportunity, not something to be fearful. Do your own research. Get familiar with these companies you're investing in, whether you do it on your own or with my help. And be patient. Wait for the right opportunities and don't rush to your decisions. Remember, investing is a marathon, not a sprint. Make a smart, informed decision, and your money will grow over time. I hope this video helped you get started on the right foot. If you want more stock breakdowns, research, and honest investment advice, make sure you hit the subscribe and notification bell so you never miss an update. If you have any questions or want to talk about stocks, drop a comment below. I love discussing investing with others and helping people learn. Let's make 2025 the year we all get smarter about investing. And thank you for watching. I'll see you soon in the next video.